Hi, everybody. Welcome to Stop Being Sold, a community of informed consumers who are sick and tired of being sold financial products they don't understand or need. So if you're tired of being a transaction, make sure to subscribe to this channel so you never miss another video from us. And also like the video. Helps us grow the channel. And also then we know that you like the content we're producing.
Definitely.
How are you today? How are you today, Brian? Whoa.
Hey, Michelle. I'm doing great. How are you doing today?
Good, thank you.
Awesome.
So today's video, we're going to discuss the different mutual fund share classes and the fees that go along with them. I think this is really important, especially that fee portion.
Yeah, and the fact that think of all the people, Michelle, that don't even open their statements, or if they open them, they don't know what they're reading. Today will help explain some of them share classes of the type of mutual funds that are inside your portfolio. So
great.
Very
Let's
important.
start with what is a mutual fund?
Real simple. It's an investment vehicle, Michelle, that's usually professionally managed that you can invest in, whether it's a monthly basis or a one-time lump sum or add, once a year when you get your tax refund, whatever it may be. You can buy stocks in there, bonds, mutual funds, or money market funds, and that's how the money's invested. So think about this. When you deposit the funds in there, and it's not just you, Michelle, it could be hundreds and thousands of other people, and it could be an unlimited number of investors who buy these funds. When the funds come in, that money manager has to put the funds to work based on the objectives of that mutual fund. And the objectives are all detailed in a great big old thick book that you probably get in the mail. You look at it and say, well, what's this? Why did I get this? And you throw it away because you have no clue because it's written by a bunch of attorneys and it's you just don't understand it. So.
Okay, well, let's break down the mutual fund classes.
Okay.
What are they?
There's multiple ones. Today, though, we're going to hit the main four that you'll usually see inside your portfolio. Class A mutual funds, Class B mutual funds, Class C mutual funds, and Class D. You probably don't hear Class D as often, but you do hear the other name for it, which is called no load mutual funds. So we're going to cover the four of them today. So.
Okay. Well, let's start with Class A.
Okay, Class A mutual funds. Pretty simple. You're charged, Michelle, upfront commission for going into this product anywhere from 3 to 5%. And the fee, Michelle, is deducted from the amount you invest. But there's usually no fee when you sell the fund. So it's front end loaded.
Okay.
And and it may have lower operating costs, which is ongoing fees inside there to manage that portfolio than the Class B or C shares. And let me give you an example of a fee for a Class A mutual fund.
Okay.
So let's say, Michelle, you put in $1,000 into ABC mutual fund. They charge a 4 3/4% commission up front on your $1,000 investment. So that would be $47.50. The fee subtracted from your initial investment, and then $952.50 is now invested. So your whole amount isn't invested. You're thinking, wait a second, I gave them $1,000. Why didn't my $1,000 get invested? Because it's Class A and the fee came out up front.
So quick question, if you do $1,000 and like 6 months later, you want to add to it,
same thing.
Another 1,000, it's the same thing. So it's every time that you're putting money into a Class A mutual fund, 3 to 5% will be taken up front.
Yeah, between 3 and 5. I've seen as high as 5 3/4, and we've seen lower also, but that's just a normal range.
Got it. Average. Okay. What about Class B?
Okay, this one's slightly different. It don't have the upfront commission, so your total investment gets put to work right away. So your $1,000, Michelle, would be put to work that day when you send in the funds. But you will have a fee when you sell. And this is usually called a back-end sales charge. The other one was front-loaded. This one's back-end loaded.
Okay.
This fee is also called a contingent deferred sales charge. Deferred meaning until you actually sell the mutual fund, or a CDSC. Now, what I like about the Class B, Michelle, is if you hold the funds long enough, there may be no back-end fee like the A share. Some companies convert your B shares to A shares after like a 5-year holding period. So if you hold them for 5 years, you pay no fee up front. Now you pay no fee to sell at the end of 5 years because it's been converted to A shares. So over time, Michelle, that contingent deferred sales charge, CDSC, actually declines down to zero.
Okay.
But you'll also have inside here internal expenses, which is the operating expenses, marketing, distribution. Okay, so operating expenses. Think about this. What did we just mention? That big booklet that comes? Somebody's got to print that booklet up. Somebody's got to write that booklet. Them are operating expenses.
Sure.
And them are updated all the time. So these are ongoing expenses. And then, Michelle, them fees could range 0.5% to 1.5% and maybe even higher than that. So.
Okay, so quick question for you. You mentioned if you hold these long enough, there may be no back-end fee because oftentimes they'll be converted to Class A.
Yes.
But if it's converted to Class A, do you not pay that front end when it's converted? You
Nope.
don't. It's
automatic conversion. Yep.
Interesting.
So that's kind of cool. So I do like them set up that way, especially for, these are commission-based funds. So depending on the type of advisor that you're working with, these are the mutual funds that you'll see with that type of advisor. So.
Okay. All right. Let's move on to Class C mutual funds.
Okay. Like Class B shares, no upfront fee. But the deferred sales charge in this one will be a longer period. Okay. And the internal expenses, them operating costs, that kind of stuff, they're going to be much higher. Okay.
How much longer is that, the deferred sales charge?
Just depends on the company and the fund.
Okay.
So it could go 10 years, could go longer, could go indefinitely. Will cost you more over the long period, over a longer time period than Class A or Class B shares. Okay. But a great place to buy Class C mutual funds if you're looking to make a short-term trade, like 1 to 3 years.
Okay.
And so no upfront fee, maybe a short-term deferred sales charge, way out in the end, but if you sell it short-term, maybe the fee won't be as bad. But the longer you keep this, your internal expenses are going to be substantially higher than Class A or B shares.
Good to know.
This is a common one that I see all the time, where I open up a portfolio for consumer and I see a ton of Class C mutual funds in there. No Class A, no Class B. And what's sad is they could have been offered them. So.
Okay. Good to know. All right. What about the no load mutual funds, otherwise known as Class D?
Okay. Let's hit the word no load. No load kind of makes you feel that, oh, there's no fee here. I kind of like this one, right? Well, no load does not mean no fee. There's no commissions when you buy or sell shares, but they will still charge you annual expenses, which are usually lower than Class A and Class B shares.
Okay. So they do in fact have annual expenses. It's just not as high.
Yes,
okay.
Not as high.
And do you have a range, like average, or does it just depend on the company?
Just depends on the funds.
Okay. The funds.
Every fund's different. So you got to read that big old prospectus.
Right.
Yeah, there's companies out there. I think if you look online, FINRA has a mutual fund fee analysis, and you type in the symbol, and it'll tell you what the fee and the breakdown of the that fund is over time. So.
Okay. All right. So do you have is there anything else you want to mention before we wrap this up?
There's thousands of mutual funds out there today. Right. Okay. But buying them, Michelle, still comes down to what are your goals? What are your objectives? What's your time frame on holding these funds? And the right advisor will help you determine all these and determine which one's best for you and that fits your time frame.
Okay, great. Thank you for this. Appreciate it. Very succinct breakdown of these. If you made it this long, at the very end of this video, hit that like button. Again, it helps us grow this channel and lets us know that you like what we are putting out here. And leave us comments. If you have questions about if you're looking to get into mutual funds, you have one now, drop it below. We'd love to hear from you.
Definitely.
All right. Well, thank you, Brian. Thanks, everybody.